All right, so interest rates are going up. We just had a price hike from the Fed. We know that there is talk on TV of a coming recession. This means a big burst in the housing market? Well, maybe, maybe not. Stick around. We're going to get into all of this today and talk about what it means for you as a buyer or a seller in this market. Hey guys, welcome back to the channel. It is your realtor, Nick Isgro with eXp Realty here in Central Maine. Now, as I just said at the beginning, today we are going to cover some material that I've come across that really breaks down the situation in the marketplace and that I find very relevant to what's going on. Now, we know that we just had another price hike on interest rates from the Fed. We know there's a lot of talk about an economic slowdown. There's a lot of uncertainty out there. And just anecdotally, there's a lot of angst going on in the marketplace right now. You know, you're going to have a lot of people out there who are running around like the sky is falling and like the world's coming to an end. Probably not going to happen. However, you also have those people who want to act like nothing's going on and we're just going to carry on as usual. Well, that's not really true either. The market is definitely shifting. It's just a matter of whether we're going to be a more normalized market. Because remember, the last couple of years have been really out of whack. The post-pandemic marketplace has been insane. And it's not really in sync with what was going on several years ago or really any time before that. It was an unprecedented time. Now, if you've never been here, I do want to welcome you here to the channel. We do cover all things real estate here in the state of Maine, particularly in the Central Maine market. If that's of interest to you or adds value to your process in the buying and selling of homes, or maybe you just like real estate here in Maine, do me a favor. Go ahead and hit the like button on this video, hit subscribe, knock that little alarm bell. You'll be notified every time I put out new content. All right, so as interest rates are rising on the market, there's a lot of prospective home buyers out there who are wondering, what is this going to do to my ability to buy that home I've been dreaming of, I've been thinking about it, we're finally making it to the market, and now all this is happening. What is this going to do to home prices? Well, as the interest rates rise, they are going to do their job. They're going to put a little bit of dampening on some of the demand in the marketplace. There's just no going around that. However, when it comes to house prices, it's a little bit trickier because this is very unlikely to spur some kind of massive flood to the market of a lot of additional inventory. So any buyers that are going to remain in the market, which there's still plenty of them. Remember, we've gone over this many times, about 5.5 million units short in this country. That's not all going away overnight just because of an increase in interest rates, depending on what level we get to, but at least not right now. So where we've talked about this over and over and over again over the last few months, where is that supply going to come from? Because if supply is still remaining extremely limited, it might even be pushed back more limited than some of the increases we've seen over the last 2 months, then the supply and demand issue is still going to remain and the pricing on the home is likely not to have some huge market crash. Now, the reality is on the ground right now, despite the angst, despite the news, there's still plenty of jobs available. There's still lots of Americans working, and there's still lots of people spending money. Although there is a huge level of uncertainty, and there are a lot of Americans, frankly, who are having a hard time. Let's look at what's going on. We have gas at like $5 a gallon, at least here in Maine on average. Heating oil, $6 a gallon in the middle of the summer. These are things that are going to start crunching those budgets as people start looking for what homes that they're going to move into, because they have to factor into their budget. How much is it going to cost to fill the heating fuel when we get into the middle of winter? How much is it going to cost to drive to work? This is definitely causing some hard problems for many Americans, despite the fact that they may be at work and they may still be out spending currently at this time. Now, the big question is, are we headed into a recession? Well, most of the experts are going to say yes, although it's unlikely to really hit in 2022. In fact, most of the experts are predicting that in 2023, the US economy is going to enter some kind of recession. However, the question is whether that's a major recession or whether it's a minor recession. The Fed interest rate hike, remember, is actually meant to dampen interest in the market, and it's meant to actually slow down a lot of that buyer demand. In this case, we're talking about the real estate market, which will slow down some of that accelerated growth we've seen in the pricing. Does that mean that the pricing is going to fall? Not necessarily. What it means is that we're likely to see much slower growth in the home pricing, and we might see even some leveling off. And we've talked about that here. I know in the beginning of the year, Zillow, Goldman Sachs were expecting kind of like another year of double-digit price increases. And in some parts of the market, that kind of high 100,000s to mid 200,000 range, that kind of starter home market, we've seen that all spring. It's been multiple offers, well over asking price. Outside of that market though, once we start getting 300,000 and above, there's definitely been a slower market happening here, even right here in central Maine. It's not that the houses aren't selling, it's that they're actually just sitting on the market for a few weeks in much more normalized fashion as they were before. Now, as homes sit on the market for a little bit longer because there's less buyer demand, that's gonna force the prices to level off. They're just not gonna be able to maintain constant double-digit growth year over year if you have less people with less affordability because of the high interest rates. Now, here's the catch, okay? One of the things as prices have gone up in the market is that's actually enticed people in an already tight market to say, well, you know what, maybe at the very least, we'll cash out now, we can rent for a little while, we'll do what we gotta do, but at least we're gonna make the money on our home. If prices start to soften, that's not going to help the inventory shortage. In fact, that might actually have some sellers who are sitting on the edge thinking about jumping into the market saying, you know what, maybe we'll hold off for a little bit, we might have missed some of that peak. There are certain markets that probably will cool off a little bit in that sense, meaning they've already peaked. In most markets, particularly in rural markets like Maine and other states like us, what we're going to see is probably a little bit more traditional growth in the valuation of homes. You know, instead of 10 to 14% growth on your home, you're more likely to see, 1, 2, and 3% growth on the home. That's going to be a more likely scenario as we move forward over the next year. That appreciation doesn't necessarily stop, it slows down depending on where we are with rates and where we are with some kind of coming recession. Now, while there are some places in the country where prices have actually lowered a little bit, that hasn't happened here in Maine, and it really hasn't happened in the majority of the country. What we are just seeing is a little bit of price growth slowdown, meaning you're just growing your price at a slower rate than you were before. Let's think about what that does to affordability though. So we do believe that we're going to continue to see moderate price increases over the next coming years, despite what happens, because of that inventory issue that really isn't going away anytime soon, barring some kind of major event that forces tons and tons and tons of people to sell their homes, and we just don't see that on the horizon right now. Now, if prices remain strong, and even if they start to grow at a slower pace, but the interest rates are still going higher, what does that do to affordability? It's going to stretch the buyers much, much thinner, and this is going to be the concern over the coming year. As the rates continue to go up, the affordability of the home goes down, but there's nothing that shows that the prices of the homes are really going to take that big of a fall. So you're going to have same kind of demand when it comes to the inventory and the pricing structure, even maintaining at their current levels. But with a higher interest rate, you're going to be able to afford less house. And I know some of you out there are going to point to the fact that in May we saw some of the mortgage rates fall. Well, we know we just had another big hike. And this is pointing to the fact that we probably are beyond that post-pandemic era of just absolute rock bottom prices on the mortgages, because the Fed's probably just not going to be able to go back to where they were during the pandemic and post-pandemic cycle. So here's the important point for buyers. For sellers, what you could probably take out of this is that home prices, if you're considering selling over the coming year and now is not the right time for you, probably not that big of a deal for you. You may not see double-digit growth over the next year, but the pricing you should probably expect in your home will remain very, very strong based off current market conditions. If you were to kind of look around right now, it's going to be very similar to what you see right now. On the buy side, however, not going to probably be the same scenario. There's a very high likelihood that it's going to cost you more to buy that home a year from now than it is right now. And already right now, it's going to cost you more than it did a year ago. Now, some perspective here. The rates that we're talking about right now are not catastrophic. In fact, the rates that we have right now and the rates that we're going to right now, 10, 12 years ago, would have been considered great interest rates. It's just now we're so used to having basically zero interest on these things that we've been conditioned to think that normal interest rates are high interest rates. But it doesn't change the fact that affordability will be less because the home prices are likely not going down, the rates are likely going up a little bit. And the last big takeaway here is that nothing that's happening right now, whether we have a mild recession coming in the next year or whether the interest rates continue to go up, none of this points to the idea that we're going to have a flood of inventory on the market, which is really what it would take to start suppressing the prices on the homes. I think we're going to see a leveling off of the pricing of the homes, but probably not some huge major change where the prices actually start to go down very much. Not a likely scenario. All right, so that is kind of the 30,000 foot view on this thing, the situation that we're in. Obviously, this situation changes day to day. It depends on where you live. It depends on what the local economy looks like where you live. I live in central Maine, and I would say that this is probably a very accurate scenario based on what's happening here in the local marketplace, where rates are going up, buyers are still there. It has slowed down demand a little bit, especially as you get into the higher price point categories. Homes are just taking a little bit longer to sell comparatively to that starter home market where things are still flying off the shelf. I think last month in that particular bracket, you're talking like 14 days, average days on market. It wasn't very long in that starter home bracket. So still very hot there. Pricing still very good everywhere else, just taking a little bit longer to sell. And if you're a buyer, just be careful you don't wait too long, because you don't want those rates to go up too much before you can afford less home than you can today. That's the big takeaway. Now, if you guys are in the market, especially if you're buying, I would really love to hear if you buyers out there, are you guys getting letters from your banks? Are you getting already notices on your current pre-qual letters? Are you going through the process right now? Are you new to this? That would be a great perspective to have. If you're a seller too, would love to hear from you, but that buyer perspective is very interesting in all of this, particularly because that's really where a lot of the changes are going to take place. I don't think we're going to see a lot of big changes on the sell side of things over the coming year. Anyway, regardless of where you are, drop a comment below, guys. Would love to engage with you in there and get your point of view and your perspective. All right, guys, that's it for today. Thanks so much for sticking around to the end of this video. I hope that you took away something enlightening from it. And again, my name is Nick Isgro with eXp Realty here in Central Maine. If you have any questions, need any help with real estate, give me a call. Until next week, see you next time.